going on, and that is the that is the ETF that covers the S&P 500. This is where most of the banks are. They're mostly in the S&P 500. So this has been fairly weak today. It was it's bouncing a little bit up after hours, just a tad, about 49 cents. But it was down today. And let's take a look at the 60-minute chart. We can kind of track it. You can see basically there at the end of the day, we had this sell-off, we basically have the sell-off. Now, I am short the XLF, which is the financial sector, and the reason I'm short, of course, is because I kind of expected that this would be weak today, and I think indeed it is. XLF. And that is also falling in the after hours trading. Let's go to the 60-minute chart and kind of take a look. As you can see, this is very expected, basically coming down, basically coming down here. So, kind of the same old. I mean, I think we're gonna see some weakness, more weakness in the spider. I do expect that we're going to drop below the 390 area. That is sort of the floor. Basically, currently the spider is sort of trading in a range all the way up to about 418, and then the floor is about 390, 391. And I do think that we are likely to get a fall below that. And of course, that is where the 200-day line is, basically 392. That's right on the 200-day line. I don't think that I think that's going to be a ceiling now. And I think we're going to move lower, and we're going to move lower on that news. So, not the greatest. I wish I had better news for you here, but that's kind of the way way the cookie crumbles, as it were. Basically, we're still in correction in the market, so be very careful. What a correction means, of course, is that is traded down more than 10%, basically from its current high. So basically, in a correction, we want to be mostly in cash or short. I am long several things, but mostly I am short. Now, there is one kind of glimmer of hope, and that is, of course, in the tech sector, but not in the semis, but in the semiconductors, and not the other ones. So that's kind of where to look for the rainbows, as it were. Currently, I'm in 4 stock. I'm only in 3 stocks: Axcelis Technology. This is a chip company, Lattice Semi, and FTNT. Now, I did sell AEHR, which is a chip company, which is a chip equipment company, for a profit today. I basically just pushed. My same old strategy, just pushed it up until it got to the point where it pulled back, and then of course I had a stop loss set, and that's kind of where, that's kind of where it went. So take a look at this one. This is sort of how it worked. I came up here, and then on the news today, as it pulled back, that's where I kind of pulled the trigger, and that's where we had the sell. The sell's right here, as you can see. I have a mark on it. There you go. So I'm out of ACLS. Still like the stock a lot. Waiting for it to pull back a little bit, and maybe we'll get some relief there. We'll know. We'll see. Also, I'm down a little bit on a company that I really like. It's LSCC. This is Lattice Semiconductor. Just take a quick look at it. LSCC. And that one I do like as well. I'm in it, and currently I'm down on it. So I don't like that fact, but I just came into the stock relatively recently. You can see there basically where I entered at 92.64. We're currently at 91.50. So I'm down a little bit there, but I do think it's getting ready to make a run. This is a very strong stock. It's got a 98 relative strength. That means it's trading in the top 2% of stocks currently. And that's kind of one of the things I'm looking for right now is lots and lots of strength or nothing. So last quarter, it was up 24% on the sales. The profits were up, over 50%, 53%. So looking very good. 800, quite a few funds in this one, about 880. in terms of the number of funds. And most of this is owned by Fund 72%. Basically, it's a very good category. Now, one of the ones I'm not in, I want to be in, is NVIDIA. I have not been able to make I've not been able to make a buy in NVIDIA. It's the reason I haven't bought NVIDIA. It was up today, and it's up even in the after hours. I do think there is money, safety money going here, so I may have to eat my words. But I was waiting really for a pullback to that 21-day line. Currently, it's very extended. It's 10% above that 21-day line. Theoretically, we can buy it there if on the weekly chart. But that's pretty much the maximum, and I don't really want to. I don't really want to buy it too much above that, just because the snapbacks can get extremely ugly. So that's kind of showing you kind of where I want to buy NVIDIA. Let's kind of put the chart up here and give you a look. See, it was up today, and then it's up in the after hours. So I do think that we are seeing money come back into the course. Yesterday, they announced that they had an AI chip, which is very significant. Now, here's one of the things about NVIDIA. It is forming this cup, as you can see, and it's coming up potentially to about the $300 level. I still think that I need to see it pull back a little bit more before I would be a buyer here. So just kind of FYI, and basically that's pretty much it. I don't expect that I'm going to be, that I'm going to be doing any other shorting until I kind of see where the other shoe drops. So that's kind of my point of view right now. Basically, what's going on, of course, is that we've got the only short pulling ahead, of course, is the XLF, and of course that one is doing pretty good. I do expect some more weakness in the financial sector, because even though this interest rate increase is just killing the bond holdings of the banks, and we may be in a situation where they're going to have to get bailed out, more than just one. I think they said that there were 10 banks on the list, but I think the number's a lot higher. I think they're really not saying how many it's on, but it was the XLF was down today and up in volume. So who knows what's going to happen there? But I do kind of expect some weakness going forward in the banking sector. So I may even be increasing my short on this. So we'll see what happens. And I do have a kind of an interesting little chart here that I want to kind of show you. I don't know if you can see this. Hopefully you can on TikTok, because these are kind of the watch list stocks that I'm looking at currently. And I don't know if you can see this. This is going to be tough because it's kind of not the greatest, not the biggest, but you might want to write these down because I think these are getting, if you're going to look at any long stocks at all, these are the ones that are sort of coming out of basis and possibly there's something there. ANET is one of them that I like. Palo Alto Networks, of course. Mobileye, I like. I'm going to kind of avoid Wingstop and PulteGroup just because I don't think that they're right. One stock, though, that I really think is a standout here is SMCI, Supermicro Computer. I definitely think that one is definitely something that you want to look at. This is under accumulation right now. Currently, it was up $4.29 today, or about 3.96%. It's in the 99 relative composite rating. That means it's in the top 1%. So it's looking very, very good. Now, it is a little bit far away from the 200-day line, the 21-day line. So if I were going to buy this one tomorrow, I probably would wait. As you can see in the after hours, it's falling a little bit. So don't buy this one right out of the gate. Take a look and see how it's acting. If it's pulling back within, say 5 to 10% of the 21-day line, I would really consider this one SMCI. Now, I don't own it, but this is one I'm looking at. Really in the, really in the, really out there. So let's take a question from everybody on TikTok. Thanks for taking a gander over here. Hey, from Wales. I love it. thank you for looking at the show. Thank you for looking at the show all the way from beautiful Wales. Boy, I tell you what, I've never been to Wales, and I've always wanted to go. And one of my best friends, actually here in Dallas, is originally from Cardiff, so very nice place. All right, let's see. Made some money on the SPY today. Yeah, that's the first SPY cat too. Very good move there. Taking in the SPY. That's smart. Let's take a look kind of at the daily moves in the spider. SPY, of course, is the symbol for this stock. I'm going to take a look at the 15-minute chart. Well, let's take a look at a little bit. Let's take a look at the 5-minute chart and kind of see what's going on there with the spider. This is today, basically. It's basically from here. Basically, yeah, there we go. So from about there to here, this is the spider today. And as you can see, we kind of went, we were flat until Powell makes his announcement. Initially, there was hope, but hopes were dashed, and we went lower. So this one probably was a good short. I didn't short it, but probably was a very good short today on the spider. So interesting. Do you know what happened today around 12? Yes, absolutely, I do. What happened around that time? Let's go back to the chart on the spider. As you can see, as you can see there, this is about 12. Yeah, see, this is right about where we're talking about here, right here. And what happened was, this is when Powell addressed the, this is when Powell addressed the world, basically. This is what happened here, right at about that mark. So let's kind of look and see. Yeah, there we go. So that's when Powell basically came on the telly. Boom, he started saying, okay, 0.25%. Everybody thought that he was gonna pause it because of the banks, but the problem is, they're gonna probably go another round. I think you can see that's exactly what happened. It went down, so not a good thing. Not a good thing. Do you think we have some upside before more down? I think so. I think that we might get a dead cat bounce, but don't bet the farm on it. Stay in cash as much as you can right now, or short. I just think that, yeah, we may have a little bit of upside, but right now you just got to be super careful in the market. It's just one of those things. It's just a tough market to go, to be in. It really is. So yeah. All right. Let's FRC. Okay, this is the. What about FRC? That real quick. FRC. Great. And that is First Republic Bank. And as you know, we've had a lot of trouble with First Republic. There was. Let's go back to the daily chart. Kind of look at it, and everybody can see it. But here's what happened with First Republic. Of course, this is when they this is last week here, and then boom. It looks like we're getting some. It's a little bit of a dead cat bounce there. There is some. Here we go. I'm back. So sorry about that. Okay. First Republic Bank just really doesn't look very good right now, and it's just Just a bad situation. All right, let's talk with Sandeep. Thank you very much, Sandeep. Always, as always, thank you for uh, um, for weighing in. It's in a downturn. Yes, I think it is. I think I think this is going to signal, unfortunately, another leg down here. And what I like to do, kind of, is look at some indicators here. I'm going to first look at, of course, the spider SPY, and let's see if we can go from the first of the year. There we go. Go back one. See if I can get this better. It's going to go with the XLF, and okay, up. Not liking what I'm doing here. Okay. There we go. So what I'm doing here is I'm preparing a comparison chart between the XLF, which is the financial sector, since the first of the year, and the overall spider, which is basically the broader market index. So let's take a look at that real quick. Yeah, okay. So let's see if I can put this up there for everyone. There we go. All right, so this is basically what's going on with the overall market and the and looking at that compared to the financial sector. If you'll notice, the spider has been up a little bit for the year, not that much, about 3%. The XLF, on the other hand, has been down, and it's about down about almost 10%. So, and really the trouble started really back basically here at the beginning of March. This is when the banks everybody started to notice the banks were getting weak. And so I expect that we're going to continue to see this on a downward trend. And right now, I think the best way is to just be kind of in cash. I mean, I think that's going to be a good strategy here, at least for right now, until we can figure out kind of where to go. Let's look at these two. Okay, these are two I would be very, very careful about buying. LUV and JET. See, these are airline stocks. I just do not see them doing well in a downturn. I don't see them doing well. But let's take a look at both of them. Love, of course, is Southwest Airlines. But I don't think it's looking very good for that. Let's take a gander at the chart for Southwest. Oh, goodness gracious! Let's see if I can get that chart up there. There we go. All right, so this is this chart for Southwest Airlines. Here's the thing. I don't think this is okay to buy at all. I think it's in a downward trend. And a downward trend it's not a good thing. Yes, it did. It rallied to the 10-day line, but it immediately went down. So I don't think this is good. I don't think it's good. I wouldn't short this either, but it's below the 200-day line, just not looking good in terms of something to buy. Just not really what you want to be. Not really what you want to be in. So I wouldn't buy this. I wouldn't buy Southwest Airlines here. It just doesn't look good. The chart is no good. Now, JET is the ETF that covers the airline industry. And let's take a look at that one. Let's see if I get a. It's not giving me JET. Hopefully, no, it's not recognized. Unfortunately, I think it's JETS. Let's see if it's JETS. No, still not like it. Still having trouble with my charts here. It's JETS. Yeah, JETS. Okay. This is the ETF that covers There we go. So this is the chart of Jet. And again, it just fell off the cliff too. As you can see, it fallen below the 200-day line. So here you just got to be careful. I just wouldn't buy either of these. I just wouldn't buy either of these at all. I mean, I think they're both bad. Don't try to be a bottom fisher here, because believe me, it can go much lower. So, right now, again, we're in a correction. So you want to be basically in cash right now. Anything that you want to be buying, you want to make sure that it's in the top groups. And currently, let's look at the groups again today, because this will kind of give us a look-see here. Actually, these are stocks that I am looking at as potential buys. The best one I'm seeing right now is Super Micro, and that is strong. It's off a little bit in the after hours, but this one is strong. It basically made pretty good headway today. I don't quite know what's going on with Super Micro. I definitely think it's probably going to be bought by somebody. I don't know who that is. Let's kind of look at it here. Flip on over to the chart for everybody on TikTok. So basically what's going on here is that it was up tremendously today. It's coming out of this base, and there just seems to be a whole lot of buying activity going on here. We're not totally at the right place yet, but this is one that you definitely want to put on your watch list there. So just gotta look at this one. All right, let's see. Is it a good opportunity to buy any bank? No, no. Bad time to buy a bank right now. I just think you got to be careful. I just think right now is not a very good time to buy a bank. I know that everybody, you think, wow, it's on sale. I want stuff that's on sale, but you just have to be really, really, you just have to be careful. I mean, I just think it could absolutely go lower. So I don't think this is a good time to buy any bank, even JP Morgan, even the biggest ones. I just think that right now, we're going to have another banking crisis, I'm afraid. It's going to be like 2008, but then again, not like 2008. So I think we have to be extremely careful when it comes to that. All right, let's look at Hood. Hood, Mr. Deli Coffee. And let's look at Hood. I wonder what's going on here with Robinhood. Robinhood. Not looking good for the Hood. It's under the 200-day moving average. I just don't like to buy anything below that 200-day average. That's kind of what I'm trying to show you here. Is that we are below that. There we go. So we're right below that 200-day line. Not a good place. It does look like, though, that we have the 50-day moving above the 200. Let's wait to see if there's any strengthening going on here. I just don't like this chart. I don't like the fact the investment it's in. I don't like anything in the finance area right now, to be honest with you. This is the chart for the monthly chart for Robinhood. I just don't think this is a good stock. Not not trying to put my spin on it, but I don't think it's really very good at all. All right, let's look at Tesla and see if there's anything there. And let's see what it did today. It's off a little bit, I think. Not sure. Didn't actually look at. Yeah, it's off a little bit today. That's the thing about Tesla. It's basically Tesla's trading in a range from about the 218 area right here down to the 50-day moving average, so which is right about here. So really, about 265 or so, and it's sort of trading in this range, and it probably will move higher, but right now it's pulling back. Again, until it breaks through one of these, I'm really not going to be interested in Tesla right now. Again, it's not a really great time to be trading. I mean, I am trading. I trade on a daily basis, but right now, just not anything good out there. This is just not anything good out there to see. All right. Do you think we have some upside before now? Down, possibly, but I don't think we're going to get a whole lot of action here. All right. Well, not much to report today, but I tell you one thing I do have that for you that is pretty great, and that is my friend Gavin McMaster, who is really, really a fabulous options trader, and he has a course. It's called the Options Mastery Course, and it's real good. And let's go over to the Options Mastery Course. We do have a special on it, and it's really only for a few more days, and that's Gavin McMaster's course. It's basically $397. I took this last year. It was excellent. I made enough money in the month following to pay for this several times over. I made well over $1,000 using some of his techniques in a very, very bad market, by the way. Definitely worth your time. It's $179 for the course. It's easy to sign up for. All you have to do is, if you're watching on TikTok, just jump up to my bio, hit the bio, and just click on the first thing, and it'll show you about the options course. So definitely a good way to do it. If you're watching on TikTok, it's super easy. All you have to do is go to the address on the bottom of the screen, which is Options Mastery Course, and it is https://stan.store/Dallas Trading Floor, all one word, and that'll give you they'll give you a special offer. It's only available to people that are watching the show or on our list. So that's one good thing about it. But it's a very good course. Take a look at it, and I guess I'll see you tomorrow at 5. Not really much to report. Not a good time to be going long on anything. Look for, try to be more in cash and see if we get any movement here. But definitely looks to me like we're probably going to head lower here. I hate to say that, but we're probably going to head lower from here, at least for a while. So the best thing to be right now is sort of in a cash position. So I'll be back tomorrow at 5. So until then, happy